Corsair Gaming's fourth quarter and full year 2024 earnings conference call. As a reminder, today's call is being recorded, and your participation implies consent to such recording. At this time, all participants are in a listen-only mode. A brief question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star then 0 on your telephone keypad. With that, I would now like to turn the call over to Ronald van Veen, Corsair's Vice President of Finance and Investor Relations. Thank you, sir. Please begin.
Thank you. Good afternoon, everyone, and thank you for joining us for Corsair's financial results conference call for the fourth quarter and full year ended December 31st, 2024. On the call today, we have Corsair CEO Andy Paul, Thi La, currently Corsair's President and Chief Operating Officer and Chief Executive Officer effective July 1st, 2025, and CFO Michael Potter. Andy will review highlights from the quarter, followed by Thi, and Michael will then review the financials and our outlook. We will then have time for any questions. Before we begin, allow me to provide a disclaimer regarding forward-looking statements. This call, including the Q&A portion of the call, may include forward-looking statements related to the expected future results of our company and are therefore forward-looking statements. Our actual results may differ materially from our projections due to a number of risks and uncertainties. The risks and uncertainties that forward-looking statements are subject to are described in our earnings release and other SEC filings. Note that until our 10-K has been filed, these numbers are preliminary. Today's remarks will also include references to non-GAAP financial measures. Additional information, including reconciliation between non-GAAP financial information to the GAAP financial information, is provided in the press release we issued after the market closed today. With that, I'll now turn the call over to Andy.
Thanks, Ron. In our last earnings call, we talked about how exciting the future looked because of new technology GPU cards around the corner, about the success of the Black Ops 6 launch, and about how the high end of the gaming enthusiast market was on hold waiting for these new GPUs. So here we are now in Q1, and it's all happening. 50 series Blackwell GPUs are out and shipping. Enthusiasts are lining up to buy components from us to support these GPU cards. And GTA 6, the most anticipated and hardware-demanding game, is now in sight, although still likely a year away. Our gaming business has never looked so strong, and we're well into the integration of the Fanatec sim racing company. Q4 was the start of what we believe will be a strong ramp in our business over the next few years. Revenue and margins were all strong, especially around Black Friday and the latter part of the quarter. We ended with a solid quarterly revenue number of $414 million and adjusted EBITDA at $33 million. We took over the Fanatec sim racing business in late September. We are even more positive on the Fanatec business and sim racing opportunity now that we've had a quarter to work with them. We are getting them fully integrated into our systems and sales and customer support networks and expect this to be a positive revenue and EBITDA driver for us as we move forward. We have seen overwhelmingly positive sentiment from the customer base, who are delighted that an enthusiast company is now overseeing what we would call the ultimate enthusiast category. We're in contact with many of the F1 teams and other parts of the racing ecosystem, and we see the same level of enthusiasm there about Fanatec joining with Corsair. Corsair is in the unique position that we can offer every part of a sim racing solution, from the frame, the seat, the wheels, pedals, and accessories, to the gaming PC and monitor. This gives us huge opportunities to expand our current footprint. And this is a fast-growing market, with the Netflix series Drive to Survive having really opened up F1 racing interest in the US. For our components and memory business, we mentioned in the last earnings call that the high-end early adopters were on hold waiting for the new GPU launch. Now they are back, and we have immediately seen a rush for high-end components that are needed to build the latest gaming PCs using these new GPU cards. The cards are all higher power than before, so we immediately see demand for higher wattage power supplies and better cooling components, which will drive up our component ASPs. Our gaming and creator business has been growing all year, with 20% year-on-year numbers. The Fanatec acquisition accelerated this in Q4. Our Elgato business is also doing extraordinarily well, with product hit after product hit, and the Stream Deck product line now forming an entirely new category in the market for peripherals, as more and more people consider a Stream Deck as a must-have device alongside a keyboard, mouse, camera, and microphone. Creator products give us the ability to add more and more features for consumers to use and enjoy, and Elgato has also started to incorporate artificial intelligence into some of our new products to expand these feature sets even more. We have seen some great wins in our gaming peripheral products, with our K65 wireless keyboard winning several industry awards and being picked by Apple, along with our M75 wireless mouse, to feature in their stores as gaming accessories. Our Custom Labs initiative, which gives us the ability to customize products at the one-off or short-run level, gives us a huge advantage over our competitors. In summary, we look forward to a great 2025 and expect continued growth now in the coming years. Lastly, we announced today, along with earnings, that after 31 years at the helm of Corsair, it is time this year for me to retire. Timing of this will be at the end of the second quarter. It has been an incredible journey for me to lead the wonderful global team at Corsair, and we achieved more than I could ever have imagined, and I look forward to cheering the company on as it continues to innovate and build on its leadership position. Thi La, our current president and COO, has been selected by the board to become the new CEO of Corsair, effective July 1st. Thi has been with the company for 14 years now and has been president and COO since 2017. In that role, she has led all the commercial, operations, and product development functions in the company through a massive growth period. So this transition to the CEO role over the next few months will be quite straightforward and well-deserved. I am very confident Thi will do a great job leading the company through its next phase of growth. Let me now turn the call over to Thi before Michael reviews our financials. Thi, please go ahead.
Thank you, Andy. I'm honored and excited to have the opportunity to become the Chief Executive Officer of Corsair. As Andy said, I have been part of Corsair for 14 years now and love working with gamers and creators. I have been working alongside Andy to build a moderate DIY business to now over 30 exciting product lines and 6 great brands, growing the company from $300 million to the current level. Prior to Corsair, my experience spanned from running R&D, operations, to managing product lines that generated over $3 billion in revenue. My passion is to make great products for our enthusiast consumers, and my goal is to put customer first while growing our presence in a robust market. 2025 is an excellent time for Corsair. With the acquisition of Fanatec and NVIDIA 5000 series launch, I feel good about starting our next phase under these tailwinds. Let me now turn the call over to Michael for a review.
Thank you, Andy and Thi. Our stronger-than-expected performance in Q4 helped us to end the year in a strong financial position, and we had balanced inventory levels in both the channel and our warehouses. Throughout 2024, we remained committed to strategically expanding our portfolio, investing in innovation, reducing operating costs and debt, and strengthening our balance sheet. This includes the purchase of Fanatec and the increased investment into Elgato's supply chain, reinforcing our capabilities in key growth areas. As Andy highlighted, we believe we are well positioned to capitalize on healthier demand trends as we return to growth and expect to continue our disciplined approach to debt reduction in 2025. In terms of the specifics, Q4 2024 net revenue was $413.6 million compared to $417.3 million in Q4 2023. For the full year 2024, net revenue was $1,316.4 million compared to $1,459.9 million in 2023. European markets contributed 38% of our Q4 2024 revenues, compared to 38.4% in Q3 2024, while the APAC region was 9.1% of our Q4 2024 revenues, compared to 10.3% in Q3 2024. Turning now to our segments. The Gamer and Creator Peripherals segment contributed $169.6 million of net revenue during the fourth quarter, compared to $136.8 million in Q4 2023. For the full year 2024, Gamer and Creator Peripherals segment revenue was $472.7 million, compared to $394.9 million for the full year 2023. The Gaming Components and Systems segment contributed $244.1 million of net revenue during the fourth quarter, compared to $280.5 million in Q4 2023. Memory Products contributed $126.3 million in Q4 2024, compared to $145.5 million in Q4 2023. For the full year 2024, Gaming Components and Systems segment revenue was $843.7 million, compared to $1,065 million for the full year 2023, with Memory Products contributing $429.9 million, compared to $517.4 million in 2023. Overall gross profit in the fourth quarter was $108.2 million, compared to $102.7 million in Q4 2023, reflecting the strong growth in our Gaming and Creator Peripherals segment. Gross profit for Q4 includes the impact of $4.2 million of fair value step-up of inventory acquired from the purchase of the Fanatec business. Gross margin increased to 26.2%, compared to 24.6% in Q4 2023. For the full year 2024, gross profit was $327.6 million, compared to $360.3 million in 2023. Gross profit in the Gamer and Creator Peripherals segment was $63.9 million, compared to $50.9 million in Q4 2023. Gross margin improved to 37.7%, compared to 37.2% in Q4 2023. Without the impact of the $4.2 million fair value adjustment, gross profit would have been $68.1 million, and gross margin would have been 40.2%. We're pleased with the strength in this business and expect it to continue in 2025. The Gaming Components and Systems segment gross profit was $44.3 million, compared to $51.8 million in Q4 2023, reflecting the lower sales volume. Gross margin was 18.1%, compared to 18.5% in Q4 2023. Our Memory Products gross margins in this segment were 15.3% for the fourth quarter, compared to 13.5% in Q4 2023. Fourth quarter SG&A expenses were $85.3 million, compared to $73.8 million in Q4 2023. Fourth quarter R&D expenses were $17 million, compared to $16.7 million in Q4 2023. We continue to invest in innovation, including our peripherals business and new growth opportunities like sim racing, that will help us to accelerate revenue growth. GAAP operating income in the fourth quarter of 2024 was $5.9 million, compared to $12.1 million in Q4 2023. Fourth quarter adjusted operating income was $31.7 million, compared to adjusted operating income of $31.8 million in Q4 2023. Adjusted operating income was $45.7 million for the full year 2024, compared to $85.4 million in 2023. We're pleased to end the year on such a strong note and remain focused on further improvements as we return to our growth mode. Fourth quarter net income attributable to common shareholders was $1.3 million, or 1 cent per diluted share, as compared to net income of $6.2 million, or 6 cents per diluted share in Q4 2023. On an adjusted basis, Fourth quarter net income was $24.8 million, or $0.23 per diluted share, compared to an adjusted net income of $23.2 million, or $0.22 per share in Q4 2023. For the full year 2024, adjusted net loss was $2.7 million, or $0.03 per diluted share, from adjusted net income of $58.3 million, or $0.55 per diluted share in 2023. The 2024 results include the adverse effect of a net $32.5 million non-cash charge from a valuation allowance on deferred tax assets. Finally, fourth quarter adjusted EBITDA was $33.1 million compared to $33.7 million for Q4 2023. For the full year 2024, adjusted EBITDA was $54.7 million compared to $95.1 million in the year-ago period. As noted earlier, we're pleased to end the year on such a strong note and remain focused on further improvements as we return to our growth mode. Turning now to our balance sheet. We ended Q4 with a cash balance including restricted cash of $109.6 million. We ended the year with inventory up slightly compared to last year, mainly caused by the newly purchased Fanatec business. We continue to expect that under our normal cash cycle, we will have increased cash generation starting in Q1 2025. We ended Q4 with $174 million of debt at face value, down $25 million year over year, and our $100 million working capital revolver remains undrawn and fully available. Overall, we expect liquidity to remain excellent through 2025, allowing us to be flexible as opportunities present themselves, and we expect to continue to reduce our debt in 2025. In terms of the full year 2025, we expect revenue growth to improve through the coming year, with a further improvement in adjusted EBITDA led by an additional improvement in margin and a rebound in demand for the company's high-performance gear for gamers, streamers, content creators, and gaming PC builders. We expect every quarter in 2025 to be better than 2024, with the biggest year-over-year improvement expected to be in the second quarter, mainly due to the timing of the new NVIDIA GPU launches. As fairly typical in a new GPU launch, initial volumes are lower and expected to ramp throughout Q1, so the year-over-year impact is expected to be less significant in Q1. We're also expecting our typical seasonality with the second half revenue higher than the first half. Finally, our current outlook reflects what we believe the impact of the newly announced tariffs in the USA will be after mitigation. As a reminder, we had already moved much of our production of USA-bound products out of China 5 years ago and had planned further actions in case more or expanded tariffs were announced. Mitigation is always some combination of source location, supplier price adjustments, and price increases. For the full year 2025, we're expecting total revenue in the range of $1.4 billion to $1.6 billion, adjusted operating income in the range of $67 million to $87 million, and adjusted EBITDA in the range of $80 million to $100 million. Assuming we maintain the same debt and cash balances in 2025, we'd expect to have approximately $2.2 million of net interest expense per quarter. We're using an effective tax rate of approximately 15% to 17% for 2025, full year weighted average diluted shares outstanding of approximately 106 million to 110 million shares. With that, we're now happy to open the call for questions. Operator, will you please open up the call for Q&A?
Thank you. We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. And your first question today will come from Aaron Lee with Macquarie. Please go ahead.
Thanks for taking my question. Andy, congratulations on a storied career. It was great working with you, and I hope we'll be seeing you pop up again somewhere in the industry in the future. Want to start with maybe the Fanatec acquisition. Sorry if I missed this earlier, but is that still on track to be done by the second quarter? And what items are still ahead to work through as you course correct that asset? And along those lines, can you also talk a bit more about your expectations for this business's growth in 2025?
Yeah, well, thanks for the kind words, Aaron. So in terms of the integration, we are largely through it. The two parts, right? One was to sort out the customer service aspects. We've largely done that. And the second part of it is to integrate them in with our systems. Some of that is just sort of nice to have, like putting them in with our financial system so you can track things better. The other part of it is just better logistics. So we're getting there. I think in terms of getting them back to where they were, we're pretty much there now. However, the potential of expansion is really what we're working on now, and that's a combination of re-engaging with or engaging with retail, which they hadn't done before, and secondly, engaging with the network of people that actually build the complete sim rigs for customers. So those are things we're looking forward to. But I would say that having discussed it with our wholesale sales channel and our retailers, everyone is super excited about this opportunity.
That's great to hear. And then I wanted to touch on partnerships. Over the last couple of quarters, you've announced some major partnerships, with Activision and Apple. Can you just talk about how these partnerships have impacted the business, whether it's increased brand awareness, sales volumes, anything like that, to help us understand how partnerships like these just kind of flow through the business? Thank you.
Yeah, I'll turn that one over to T because she's been mostly involved in the partnership activity in the Apple. But T, you want to take that?
Yes, thank you, Aaron, for the questions, and thank you, Andy. We are pretty pleased with the Call of Duty franchise picking us as a strategic exclusive partners for the full product range. And during the holiday season, after the launch of the Call of Duty Black Ops 6, we see significant traffic increase coming to our website to look for information products, and the excitement level is high. So we see this as a very valuable marketing relationship for multi-years, and we're looking for additional participation between the two companies on the next wave of game launches. With regards to the Apple relationship, we are happy with the results during the holiday season. We think that from a gaming brand perspective, we brought, really good value to the relationship, and, Apple and Corsair are happy with the holiday results.
Great, I appreciate it. Thanks, Andy, and thank you, T. Looking forward to working with you.
Thank you.
And your next question today will come from George Wang with Barclays. Please go ahead.
Oh, hey, Andy. Thanks for working with you in the past, and wish you all the best. And T, welcome to the CEO position, and look forward to working with you in the future. Just two quick ones. Firstly, obviously, top of mind in terms of the GPU refresh in the first half, and especially kind of a bit more selling momentum into the second quarter. Can you kind of unpack and maybe give more color just in terms of cadence, kind of, you gave a range for the revenue, low end and the high end. Just curious, kind of, what could drive, towards the high end of the guidance for the full year, and just how to, think about the cadence for the GPU refresh.
Yeah. So look, this is we've been talking for a while about the fact that there's a lot of pent-up demand for this GPU refresh. The way I was thinking about it was that all the, any time you look back or you look across at what people are using, we always talk about the average refresh time being sort of 3 to 5 years for gaming stuff. But of course, that's an average, and there's going to be people with 10-year-old gear and 7-year-old gear. I think what happened before COVID or at COVID was all the people with old gear renewed it. And so we've had sort of a skewed distribution since COVID. But if you think about it, we're now 3 years exactly since the start of COVID, or almost 3 years, and we're 5 years from the beginning of it, 3 years to the end of it. So we're now right into that point where the big bulge is really ready to upgrade. And so I think there's been huge anticipation with the 50 series cards. And I think it's funny watching the media comparing the 50 series cards with 40 series cards, but that's not what the consumers are thinking about. Most consumers have got 20 series and 30 series cards, and so they're going to be upgrading 5-year-old gear. So in terms of the cadence, we don't know exactly what NVIDIA's plans are. I mean, they've been sold out, fairly limited quantities in January. Those were sold out in hours. And so I think that the big volume is going to be when the 5070 and 5070 Ti start to get shipped, the more affordable one. So I think in terms of volume for us, it's going to be gradual pickup through the year. At the moment, I'd say for the last 2 months, we've been kind of sold out on some of our component SKUs, power supplies and memory. So we're seeing pretty good activity in terms of the channel bringing products in. But I think it's going to, I think we're looking forward here to the next 2 years of solid refresh activity. That's the way I think about it. It's not going to be a 1-quarter blip or anything like that.
Oh, okay, great. Just a follow-up in terms of the margin. In the prepared remarks, you guys talk about margin improvement, especially kind of cyclical recovery on the DIY components and continuing the margin trends for the peripherals. Maybe you can unpack kind of across both end of the spectrum and any other lever you guys can pull to kind of further improve the EBITDA margin for 2025.
Well, I think we have a target of mid-20s gross margin on the whole components category. And we were doing well in terms of steadily growing those. I think post-COVID has been very challenging because anytime you get a demand that's a little less than expected, both because of the big activity in COVID, but also just because there was a little bit of inflation going on. Well, a lot of inflation going on, so some people's wallets were a bit stretched. Anytime you get that, then competitors that are a little less well off than us tend to be desperate for cash and will discount. So I think in a more buoyant market that we're looking forward to, we should be much better off, much more stable inventory and demand. And so I would expect that we bounce back pretty quickly to our target or expected gross margins. And T's been working feverishly with the team to get these things back on track. So I think when you actually look at the expected EBITDA for this year compared to last year, as much of that is coming from improved margins than it is from revenue improvement.
Okay, great. I'll go back to the queue. Thanks again.
Again, if you have a question, please press star and then 1. And your next question today will come from Doug Creutz with TD Cowen. Please go ahead.
Hey, thank you. You mentioned that your guidance incorporates the expected impact of the tariffs. I'm just curious if you think that kind of relative to your competitors, if you're sort of relatively better positioned or worse positioned with tariffs, could it be a competitive advantage? Any color you can give in that would be great. Thank you.
Well, there's 2 parts to that. I'll give you a general sense, and then T can give you a much more detailed view of where we stand on tariffs. It really depends on the industry. And what we saw the last time tariffs came into play, which were mostly, of course, against China. A third of our business is memory, which we build in Taiwan. The chips are not made in China. Many of our competitors then had assembly plants in China, for example. So, it depends competitor by competitor and segment by segment, to be quite honest with you. I mean, some of the peripheral categories, we've already got a lot of production outside of China, so have our competitors. So I don't think, other than in some very specific areas, we're going to be any better or worse off than our competitors, but we're in pretty good shape. So do you want to just give a...
Yeah, so tariff is really not a new problem for Corsair, especially tariff from China. So we've been working around the clock since the past 4 years to mitigate the supply chain so that we don't have any significant impact. Now, for some of the newer ones, for example, Mexico, Canada potential tariff, we actually don't have any factory location in both of those countries versus maybe other manufacturer or OEMs who had invested in those countries in recent years. So at this point, we feel comfortable with the current guidance. Of course, depending on the news coming out next, and that might change the picture, but at the moment, we feel pretty good about our supply chain.
Great. Thank you, and congratulations both to Andy and T.
Thank you.
Your next question today will come from Colin Sebastian with Baird. Please go ahead.
Hey, this is Colin Moyet on for Colin Sebastian. Thanks for taking our questions. Just two from us. So the commentary in the release around the shaping of the rebound of components was helpful. So just kind of on that, our first question would be, around components. How beneficial do you think NVIDIA's AI services business is for Corsair? For example, are you seeing people, pair Corsair products with their products kind of in that sense? And then our second question, kind of stepping back and looking at the broader video game market, have you seen any games recently kind of spur purchases of either peripherals or components? Or do you think it's going to be more, back half weighted with the likes of GTA 6 and, games like that? Thank you.
Yeah, let's take the second question first. We're going to come back to the first one because I didn't quite hear it. But in terms of new games, there's been a steady stream of games. What we really haven't had for the last year or two is what we could call a Fortnite moment or a PUBG moment. So people are typically playing older games. And I think for our component business and for people looking at new cards, obviously that tends to depend on new games that are super demanding, right? That you need high performance graphics in order to get 60 frames a second. Games like Fortnite tend to drive headset sales and keyboard sales. But if you actually look at the numbers, across the last 5 years, peripheral sales are substantially up, like 50 or 60% up compared to pre-COVID. So more people are gaming, but they're not all gaming on new games. So the activity around PC builds or gaming PC builds is roughly on par with pre-COVID now. And obviously, we know that there was a little bit of a pull forward from 22 to 24 in 20 and 21. So that's why we expect this refresh to build up and give us a little bit of growth in that area. But yeah, GTA 6 is probably the one everyone's talking about. And we'll get a glimpse of that, I think, later on in the year for console. My understanding now it's going to come out in the fall for console and then early 26 for PC. Now, the first part of the question in terms of NVIDIA AI helping or affecting our component sales, I didn't quite understand. Maybe you can give me that one again.
Yeah, so for example, people are, training AI models with, H100s, et cetera. Are you seeing people use Corsair, products in their kind of, training data centers or facilities?
Oh, I see what you're saying. So look, we have not targeted data centers. We sell products that are premium through consumers. If you're putting together a data center, once you've bought the graphics cards, everything else is just treated as a volume purchase at the lowest price. So I wouldn't think about that. I tell you what we have seen, though, is that there's a lot of people we're seeing building workstations with standard graphics cards or two graphics cards to start playing around with AI models.
Machine learning.
Yeah. So I actually do think there's going to be a little bit of a demand from that, but we can't really size it at the moment.
Okay, that's great. And yeah, congrats, Andy. I really appreciate it.
Again, if you have a question, please press star and then 1. Please stand by as we poll for questions. Seeing no further questions, this will conclude our question and answer session. I would like to turn the conference back over to Andy Paul, President and CEO, for any closing remarks.
Thank you. So thank you, everybody, for joining us on the call today. and for your continued support. If you've got any follow-up questions, please contact our investor relations department, and we look forward to updating you next quarter. Thank you and have a good evening.
The conference has now concluded. Thank you for attending today's presentation. You may now disconnect.